Hey guys, what is going on? Welcome back to the channel. As always, want to thank everyone for your support on the channel, all the viewers, all the subscribers, all the supporters out there. Showing the channel so much support, immensely appreciate it. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today I thought I would take a look and go through 6 of the reasons why I would sell off a stock, that is, get out of a stock position. This comes in response to a number of viewers on the channel asking that very question, when should they sell off a stock? So I thought I'd kind of go through and describe 6 of the reasons, main reasons why I would sell off a stock by using some examples from the portfolio as well as other stocks that I've talked about in the past. So having said all that, let's kind of jump into the 6 reasons here. So reason 1, your price target is met. So a lot of investors, when they jump into a stock, do not have a good plan kind of set out, whether they're doing a buy and hold strategy, swing trade, dividend capture, so on and so forth. And they kind of let emotions take over when they are investing. And you don't want to do that. When you jump into a stock position, you want to have researched the company very, very well, know quite a bit about the fundamentals and some of the other major impactors that will drive the price of the stock, and then put in a price target. So as an example here, I have Portola. When I jumped into the stock, my price point was $50. I jumped in, the majority of my stock was bought back in this area here when it was about $20 to $28 or so. Jumped in, bought the majority of my shares, and then my plan was that if it hit $50, I would sell off the majority of my shares, around 50 to 75%. And you can see here, with a very good FDA decision with this company, one of its products was passed by the FDA, and the company price skyrocketed up here from $36, $35 or so, up over $50. So when my price point was hit, I went ahead and sold off about 50% of my shares. And yes, I did lose quite a bit of money, opportunity cost. I could have let this kind of ride up here and sell off in $65 territory, but you can't really predict that. And you don't want to have emotions take over. Yes, this was a very exciting day. I actually have a video posted on this day. I was fortunate enough to get into the trade during active hours trading, and I was kind of detailing that trade as the trade happened. And a lot of emotion involved with that, but you don't want to let that take over and kind of dictate the price that you will sell at. So yes, it got up to $56 or so. And with that, you might say, well, if it got to $56, maybe it'll go to $100. And you don't want to do that. You don't want to have emotion take over. You want to have a very strict idea of what you're doing. If this is a buy and hold stock, yes, you don't have to sell off because you're not necessarily looking for that one big day gain here. But it is another reason on my list that I would sell off. So this is kind of an example of 2 different things. But for right now, when your price point is hit, go ahead and sell off. That was your plan. You've had that researched. That was the whole idea of getting into the stock. Go ahead and execute that. And if it does start moving around a bit, you can do some day and swing trading like I've done with this particular stock. You don't necessarily have to stick with the original plan, but you should really take a look at some of your initial price points and really go by those kind of initial analyses with regards to selling off. Don't let emotion take over is the big key behind this one. So number 1, when your price target is met, go ahead and sell off, lock in those profits. And then if you want to go ahead and do another trade or another setup, go ahead and do that. But don't let emotion take over with your trade. And this kind of goes into the second reason here. Reason 2, large short-term movements in the price of a stock. So again, this stock is a perfect example. This stock shot up here. Typically when a stock shoots up that much for a number of different reasons, it'll come right back down. So this would be another very good reason to sell off a stock. Typically if a stock shoots up greater than 15 to 20%, you might want to choose just to get out of that stock. The rapid price appreciation will typically come down over the next few days, if not immediately during that trading session. So if you have limit orders in place, limit sell orders in place for 20% on most stocks, you can go ahead and lock in those gains. And if they come back down, you can go ahead and jump back into the stock again. And that's what I do on a lot of my stocks. So again, I'm talking about Portola here. This can be any stock. Let's say, for example, you had that $50 price point put in. You can put that order in anytime. Like back here, you can put a $50 limit sell order in, have it never expire, and you don't really have to do anything other than waiting till that order executes. If it executes, the application here, your brokerage account will alert you to that. Then you can go ahead and check on the stock. If it starts trending back down again, you can go ahead and jump into the stock, and you have a very nice trade there without having to do any monitoring of that. So that's why I always like to do limit buy and limit sell orders for all of my stocks. But again, number 2 here, a large short-term price appreciation. Think about selling off the stock because typically those stocks will start trending back down. So number 3, end of the year taxes. So tax time is a very good time to think about either keeping a stock or selling off a stock for a number of different reasons. And I don't want to get too complicated with all of the strategies. There's a lot of complicated tax strategies that can be utilized at the end of the year. But it really comes down to long-term versus short-term capital gains and seeing if you want to lock in any capital losses, which may seem counterintuitive, but can be used to offset capital gains. So at the end of the year, let's say you have a few investments that have not been panning out very well. You can go ahead and sell off your position for a loss. That'll offset capital gains, reduce your overall tax burden, and then you can take that capital and jump into a different company. You can't buy the same company back or the same industry back in a process known as a wash sale, which I can go into if there's enough interest. It gets quite complicated. But you can go ahead and sell off your stock, take a loss, use that capital now for a different type of investment, and you also have, like I said, reduced your capital gains. You've offset those with capital losses. So that's one other reason why to sell off a stock at the end of the year for tax considerations. Again, it gets very complicated with long-term versus short-term capital gains, wash sales, locking in capital losses to offset capital gains. There's lots of restrictions around that, but that is a reason to sell off a stock. So, number 4, a company is acquired, mergers and acquisitions. Typically, when a company is acquired, there is what is called an acquisition premium. In order to ensure that the acquisition goes through, some companies will actually offer more than what the company is valued. Again, just to make sure that a whole process is completed. Typically, a stock can close 20 to 30% higher than what it's worth. You can go ahead and sell off, lock in those capital gains, and then if you want to go ahead and buy back that company when it comes back down, you can go ahead and do so, and you have a very nice trade that you've done. This is a quite infrequent process, but if the opportunity does present itself, it's a very good way to make some money in the short term, as well as getting out of a position if you don't necessarily want to keep that position. So another reason why I would sell off a stock. The 5th reason here is that the company fundamentals are essentially changing. Perfect example of this is GE, General Electric here. If we take a look at the 5-year graph, you can see this very large price decrease here. At one point, I think it was down 60% or so. You can see it's up 71%, and now it's down 3%. So actually about a 75% fall in the price of a stock. So when fundamentals change, when a company is taking on more debt, it has sluggish revenue growth, a number of different factors, maybe it's losing market share to other companies, you want to maybe sell off that stock and then pick it up at a later point. As you guys know from my prior videos, I'm a big contrarian investor. I like to get into stocks that I think are undervalued. GE here is a perfect example. This company here, after a very dramatic price decrease here, has an opportunity now to start increasing the price of the stock with changed fundamentals. So the fundamentals sort of brought it to the price point where it's at right now. As the company reorganizes, sells off some of its particular market segment businesses that are not, again, contributing to the bottom line. Maybe they're taking on debt. Maybe the revenue growth is very sluggish. They can go ahead and sell off those parts of the company, reorganize the company, and as the fundamentals change back to something more positive, the price of the stock will start increasing. That's the whole idea behind contrarian investing. Again, I put out a few videos about that, but that's another reason why you should think about changing your stance on a company, getting out of a position that you're in, even if it's at a loss. If you have to sell off a company at a loss, for example, let's say you held the stock through, you thought it was going to rebound, it starts to, again, continue decreasing the stock price, go ahead and sell off here. Yes, you've lost about 30 or 40%, but it prevents you from losing even more money later on, and then you can go ahead and pick up the company stock again if you so choose once some of the fundamentals change. So fundamentals, very important, it gets very, very difficult to kind of read through all the earnings reports and understand the financial health of a company. But that's a very, very good reason why you should sell off a stock. And the last reason here, the sixth reason I would essentially sell off a stock, kind of goes with the fifth reason. A company goes into bankruptcy. So a perfect example of this is Sears here. As you guys know, Sears has been losing market share to its rivals, most notably Amazon. You can see the price of the stock has essentially been going down, trending down to zero here, essentially dwindling down. It's currently considered a penny stock, $3.40. When a company has such dire financial straits that it goes into bankruptcy, that's definitely a reason to sell off. Sell off as early as you can. Some investors kind of hold on to the stock again, letting emotions take over, thinking that the stock will rebound. Maybe it will reorganize, file bankruptcy, and come out of that in a successful reboot. But you don't really want to kind of bank on that. That's a very, very big gamble. And again, risk equals reward in the stock market, but that risk is way, way too great. You should sell off that company and move that capital onto other more profitable endeavors, better investments. So those are the 6 reasons why I would sell off particular positions on the stock market. Again, a price target is met. There's a very large short-term movement in the price of a stock. Tax planning at the end of the year taxes. A company is acquired, mergers and acquisitions. There's a lot of movement in the price of a stock. The fundamentals change on a company. And then if a company has such dire straits that it is going into bankruptcy, that is definitely a reason to sell off a stock. So those are some of the reasons I would sell off a stock. There's a number of other reasons out there as well. Another reason that I missed here that you guys think is a better reason to sell off a stock. But these are some of the big things that I take a look at when selling off a stock. And again, I did this video because a lot of new investors on the channel really wanted to know what I take a look at for selling off a stock. And these are some of the most important things that I would take into consideration before really making that decision whether I would sell off a stock or not. And these are some of the biggest reasons I would sell off a stock again in my portfolio. So let me know what you guys think about that. Let me know if you have any examples of stocks that would meet any of these particular reasons to sell off a stock, especially the fundamentals changing, mergers and acquisitions, and bankruptcies. I know there's a lot of examples out there. Tried to find a few that I've talked about in the past on my portfolio, as well as using some examples from the portfolio to kind of show you guys exactly what I mean when I talk about reasons to sell off a stock. So again, don't want to make the video too long here. I'll kind of end it here. As always, if you guys have any questions on anything on this video, other videos, please let me know in the comment threads down below. I do my best to get back to you guys as quickly as I can. And again, if you guys have any great video ideas, anything that you are wondering about that you would like some clarity about, definitely suggest it in the comment threads down below, and I'll do my best to put out a video in the upcoming week. So if you guys have any questions on anything at all related to investing, cryptocurrency, real estate investing, please let me know. Always looking for new ideas to put videos out about. So again, thank you very much for all of your suggestions so far. And kind of with that, I'll end the video, and we'll see you guys next time.